today, for example, gold prices are pumping back up there. They're almost at, $2,693 an ounce. Remember, they were up to almost, 2,700, going higher. And then all of a sudden, you had the Bitcoin bounce, which up over 40% since Trump got in. I mean, if there was no Bitcoin, gold prices would probably be double where they are. But this is real and it's not going away. It's going to keep going up.
In today's news recap, gold price holding its ground near $2,700 as U.S. annual CPI rises 2.7% in line with expectations. Gold prices are holding within striking distance of $2,700 an ounce as stubborn inflation fails to drive investors out of the marketplace. The consumer price index rose 0.3% last month after October's 0.2% rise, the U.S. Bureau of Labor Statistics announced on Wednesday. The inflation data was in line with expectations. The report stated that in the 12 months leading to October, headline inflation rose 2.7%, also in line with expectations and up from September's 2.6% print. Core CPI, which excludes volatile food and energy prices, increased 0.3% in November, matching expectations and mirroring September's 0.3% reading. The report also noted that annual core inflation rose by 3.3% last month, unchanged from October's reading and consistent with expectations. Although inflation has moved higher, there were no major surprises to unsettle investors. The gold market is seeing some modest buying, but remains close to neutral territory. Spot gold last traded at $2,698 an ounce, up 0.15% on the day. While inflation remains a concern, economists note that the data contained no major surprises that would deter the Federal Reserve from cutting interest rates next week. However, uncertainty surrounding the easing cycle in 2025 continues to grow. Risks around the monetary policy outlook are set to become increasingly two-sided in the first quarter of next year. Chiefly, policymakers will be concerned about the potential upside inflation risks stemming from incoming President Trump's tariff plans, as well as the broader reflationary fiscal stance, whereby strong demand could further fuel price pressures, said Michael Brown, senior market researcher at Pepperstone. On the whole, the pace of policy normalization is likely to be much slower in 2025, with the FOMC plotting a more deliberate course as rates move closer to a neutral level, likely around 3%. Now, we'll show you the best clips of the latest interview, but first, hit the like button, smash the subscribe button, and check the pinned comment because we're offering an exclusive discount on NordVPN, an essential tool for gold and silver stackers who value privacy and security. Make sure you safeguard your online activity and protect yourself from prying eyes. And if you want to learn how to stack and how you can benefit from the gold-silver ratio to make savvy investment decisions, check our guide at goldsilverstacks.com. Enjoy the episode.
And the markets today, where the S&P was down a bit, 0.30, the NASDAQ down 0.25, the Dow down 154 points. But we're still very bullish on this. Again, we call it like it is, not who we like, what we want, what we wish. It's what is. And Trump is going to be very positive for the equity markets. And all this talk about tariffs bringing down the equity markets is not going to happen. And because he's not going to do the tariffs like he said he is, because again, we only put the facts in there, what he did when he was president between, when he ran, 2016 to 2020. And some he did, some he didn't. But he's going to do everything he can to keep his markets up. He's an investor in them. Same thing with Bitcoin. Money talks, bullshit walks. And the money's going to keep talking. And you look at the articles that we have, all the billionaires that have contributed to his campaign, it's that he's brought in as, in his staff. He's got like 14 billionaires or something in there. So they're going to do everything they can to keep the equity markets up. This isn't rocket science. So that's where we're going with that. Oil prices. Oil's at $72 a barrel, basically, for Brent crude. And that's after OPEC Plus said, we're going to keep supply down. What it's indicating is how slow the global economy is going. The United States, out of the 10 top countries, is the only one doing really great in terms of economic growth. And again, all your data is there. India now is down. It's one after another. What is that, the 5th largest? Germany, the 3rd largest in basically a recession. Japan moved from 3rd to 4th. But they're up a little bit. And and China is doing shit. 30% of its GDP is real estate based, and the real estate slump is terrible. But the Politburo came out yesterday, and they said more cheap money coming in, and we're changing the game to do anything we can to pump this up. It's not going to, because again, we have all the data there, the export numbers, what's going on, and how it's being affected. So this is serious. And it's only going to get much worse on the global economic front. But the United States is doing good. And again, they're going to do everything they can to keep pushing the equity markets up. There are some that are saying, and we write about it in our economic update, top people saying, get ready for a bust coming in 2025. But then you have others saying it's going to go up, keep going up, keep going up, keep going up. And again, we're saying Trump is going to do everything he can to keep pumping it up. That's it.
In today's news recap, silver price finally breaks free. In the early hours of the silver market on Monday, we have seen a lot of momentum, and as a result, it is worth noting that the silver market has cleared a major short-term barrier to perhaps run higher over the next few weeks. The silver market rallied significantly during the early hours on Monday, as we are now well above the $31.50 level, an area that I had been watching. We're also fairly well past the 50-day EMAs, and now it looks like we are starting to finally see some momentum coming into the market. Underneath the current trading area, we have the $30 level offering a massive floor in the market, and we had recently formed a bit of a double bottom. This is a good sign, and it's very likely that silver will find that as your hard floor going forward. There's also an uptrend line that supports silver, so the technical analysis all lines up for higher pricing. The question now will be about inflation in the United States. Will it work against silver? We'll see. But also, the silver market is also an industrial demand story as well. And if the economy really starts to take off in the U.S., silver demand could pick up there as well. So it's a bit of a cacophony of noise, if you will. Nonetheless, the simplest way to look at this chart is that we've been in an uptrend for quite some time. And now it looks like we're going to at least attempt to continue that uptrend. This uptrend is likely to be a bit surprising for some, but when you factor in the idea of the overall trend, as well as the idea that liquidity could drop in a week or so, things could get interesting. Now we'll show you the best clips of the latest interview, but first hit the like button, smash the subscribe button, and check the pinned comment, because we're offering an exclusive discount on NordVPN, an essential tool for gold and silver stackers who value privacy and security. For just a few dollars a month, you can safeguard your online activity and protect your financial research from prying eyes.
So, very important. Tomorrow, by the way, they have the inflation numbers coming out. And they're expected to be low, and they expect the Feds to lower interest rates 25 basis points when they meet. A whole section on when the economy falls, jobs go with it. The big jobs are going out. The jobs that are created, the job numbers that came out last week, the jobs are in the health service sector, which pay nothing. restaurant service sector, which pay nothing. Oh, and government slob jobs. What else do we have? More emerging nations face fiscal crisis defaults. Yep. This is serious because, again, you have to look at the whole geopolitical aspect of this. The people going to be fleeing their countries because they're going down the crapper. And it's not only the emerging markets that are getting hit hard. As the data that we keep putting out, the developing nations are hitting hard too. So this whole push against immigration is going to be very big and very global in the Western world, because there's going to be more and more people escaping the lack of basic living standards, government corruption, crime, and violence. Yep. The Eurozone business activity plummeting. Barely a word about it. Barely a word about it. All the news is about that guy that shot that guy from the United Healthcare, whatever. That's the big news. What's going on in the rest of the world hardly being mentioned. Yeah, and again, in India, the economy's gone down. The central bank is cutting rates. Very important, because you're going to see more rate cuts coming from the ECB too. And that means the United States is going to cut rates too. It's all one big game. It's all one big club. Because if the United States interest rates stay high, the dollar stays very strong, and these countries go down big. They're not going to do it. They're going to lower interest rates. And again, the lower U.S. interest rates go, the higher gold prices go. And that's where we see it going. Yep. And China, by the way, put some trade restrictions on. We have a whole article in here on U.S. companies. So there's going to be back and forth on this. Trump is only going to do so much with the tariffs. And again, I totally support tariffs, because I totally support what the former president McKinley said. Do you want cheap products? Do you want high wages? And once upon a time, they didn't have federal income tax. The federal government got their money from tariffs. And America built its country as a manufacturing powerhouse. There were plants all over this country, all over it. And now what do you have? It's dead. Thanks to Slick Willie Clinton, who gave us NAFTA. Yep. And it brought China into the World Trade Organization. Rust Belt. Isn't that a nice name? Rust Belt. We have rust belts all over. So I'm in favor of, I'm opposed to globalization. I'm an American. I believe in the founding fathers, like George Washington, no foreign entanglements. You build America. These companies, they only want to build themselves. That's why they want cheap labor going everywhere. Look at the Vietnam War. I grew up during it. We got to stop those commies. Before we don't stop them, they're going to take over all of Asia. Dominoes will keep flying. Oh, now China, there's still the same commie government there, but we import, it's our biggest second importer of shoes and clothing comes from Vietnam. So I totally support tariffs. And I'm totally opposed to federal income tax, because they only steal from us. Again, there's the article in your Trends Journal about how the bigs don't pay any taxes at all.
And that's Gerald Celente's take. Bullish on Bitcoin and equities as the future unfolds. But what do you think? Do you agree with his optimism, or do you see things differently? Is Bitcoin truly the gold of the digital age? And will equities continue to rise despite the challenges? Let me know your thoughts in the comments below. If you found this perspective intriguing, don't forget to like, share, and subscribe for more insights. Your opinion matters, and I'd love to hear it. Now watch this video right here, because you'll love it. And I'll see you on the other side.